Hi everyone, the end of financial year 2022 to 2023 is around the corner, and if you are a salaried person, we have a very interesting video for you detailing the different tax deductions available in India to salaried individual. If you like the content, do subscribe the channel and like the video so it may help the other people to understand about different tax deductions available in India, and it will help them save money paid on income tax. Talking about the tax deductions, there are certain investments and expenditures that reduce your taxable income and thereby reduce the tax you need to pay. They are clubbed under different sections of the Income Tax Act. We will share the information on some of the most common tax deduction sections that can be used by a salaried individual to reduce tax liability. One of the most commonly used tax deduction comes under Section 80C of the Income Tax Act. This section of the Income Tax Act allows investment and expenditure adding up to total $150,000 to be deducted from your taxable income. These include investment in one or more of below. You can choose any option as per your financial goals. Section 24B. This is an important section if you own house and have taken a home loan from a bank. Under this section, you can get a tax deduction from taxable income up to Rs 2 lakh on the interest paid on home loan. There are few conditions to be met to avail this deduction. Condition 1. The loan should have been taken after the 1st of April 1999. Condition 2. The house should be bought or construction should be completed within 5 years of taking the home loan. If these two conditions are not satisfied, the tax deduction reduces to Rs 30,000. The limit of Rs 2 lakh is only for self-occupied house. So what happens in case property is lent out for rent? The tax deduction allowed is still Rs 2 lakh. Though any further losses such as interest paid can be carried forward and adjusted against income from house property for 8 successive years. Section 80CCD1B. This section allows an additional deduction of investment up to Rs 50,000 in NPS or National Pension Scheme for Tier 1 account holders. NPS Tier 1 scheme is a long-term investment account that runs till you attain 60 years of age. Partial withdrawals are allowed from the Tier I account for meeting specific financial needs like marriage costs, education expenses, medical emergencies, etc. Section 80D. Health insurance has become the integral part of everyone's life. This section is useful to claim additional deductions on the premium paid on health insurance for self and family. Below are the different limits available in this section. Rs 25,000 for self, spouse, and dependent children. Rs 25,000 for parents. The limit increases to Rs 50,000 if any of the parent is a senior citizen, that is, age 60 years or above. Rs 5,000 for preventive health checkups for self, spouse, and dependent children or parent. This deduction forms a part of maximum limit available under Section 80D. Section 80DD. This section provides deduction on expenses incurred on medical treatment of handicapped dependent. The deduction available is Rs 75,000 for normal disability and Rs 1,25,000 in case of extreme disability. Section 80G. This section is related to donations made to recognized charitable institutions. Under this section, either 100% or 50% tax deduction of the amount paid as donation is allowed. The amount of deduction you are eligible for depends on the institution you donate to. For example, donations made to Prime Minister's Relief Fund are 100% deductible, whereas those made to other funds are eligible for 50% deduction. It is important to understand first that how much donation is eligible for deduction, as there are some institutions to which you cannot donate more than 10% of your gross income. Section 80GG. Under this section, deduction is allowed on the amount you pay as rent if you do not receive HR from your employer. To avail this deduction, below condition need to be satisfied. Actual rent less 10% of your total income, Rs 5,000 per month, or 25% of your total income, whichever is lowest. An important point to note here is, if you are claiming HRA, you cannot claim deduction under Section 80GG. Section 80E. Under this section, deduction is allowed on the entire amount paid as interest on loan taken for higher education from a recognized institution. The loan should be taken for the education of yourself, your spouse, or your children. To sum it up, these sections help to avail tax deduction under the old tax regime, so do make a use of these sections if you have opted for old tax regime. For more information on each section, you may please visit www.incometaxindia.gov.in. This brings us to the end of the video. Give a thumbs up if you liked the video and do subscribe to get a notification for upcoming videos. Goodbye and have a nice day.